In this lecture, I am going to explain how to record estimated liabilities or provision for the liabilities. So what is estimated liabilities and what are the general entries of a provision of the liabilities? For example, the vacation benefits, bonus payable, sales of gift card and product warranty liability. So what is the meaning of estimated liability? An estimated liability is known as the obligation of an uncertain amount, but one can easily and reasonably estimate it, which is also known as provisions. The first one is the vacation benefits. Many employers in most of the companies offer paid vacation benefits or paid absences. So these are estimated and expensed in the period when employees earn them. For example, consider that the employees of the RJ Private Limited earns 2 week paid vacation every year. At the end of the year, entry of the $4,400 of accrued vacation benefit of all employees that would be as follows. Vacation benefits account debit to vacation benefits payable. So the 4,400 is debit as the expenses of this year should be recorded this year. And but this is due but not paid. So that's why the vacation benefits payable is considered as a current liability of this year. Now take an example that some of the employees have taken a vacation in this year and the cash is paid by the employer $2,200. So vacation benefits payable account debit $2,200 and to cash will be $2,200 because that the value in dollar has decreased. It means the cash value has decreased. Cash has gone from the business. Second is bonus payable. Suppose RJ Private Limited declares bonus of 2% of the net profit at the end of the period on 31st of December. Let's take an example. The year-end adjusted entry to record the 2% of the net income is $30,000. That $600 is the bonus. And how to make the general entry of the $600 bonus, which is due but not paid. Employee bonus expenses $600 debit to employee bonus payable. So that will become the liability of the company. And the expenses of this year should be recorded this year. That's why the bonus which is earned by the employee that is recorded here $600 as employee bonus expenses, which will definitely come on the debit side of the profit and loss accounts as expenditure. The next one is the sale of gift card. Sometimes like company provide a gift card to the customer at very low price, but amount collected for the gift card will be considered as a gift card liability, but that is not considered as the revenue because gift card that we have sent, we have sold or company have sold. In future, when the customer comes to the shop and they buy some product or exchange that gift card with some article, at that particular time we will consider that the revenue is generated. But now in this case, the revenue is not generated. It is just like that we have considered and collected advance money from the client. Take an example. Suppose RJ Private Limited sold a gift card to their customers. An amount collected cash of $3,500 on 15th of January. So general entry for the bonus due will be the cash which is received account debit 3,500 to unearned revenue, that is the gift card liability. Next is the warranty liability. So when seller has obligation to pay for replacing or repairing the product or services without charging any money, when it fails to perform as expected within a specific period of time, let's say maybe 1 year or 2 year warranty, a warranty need to be estimated and recorded in the financial statement as a liability. As per the matching principle, the seller should report the estimated expenses of providing the warranty in the year when the revenue from that sale or product is reported. Let's take an example. RG Private Limited sold 100 laptops at the rate of 400 each. So total revenue was generated $40,000 on November 30th. So with 1 year of repair warranty, as per the past experience of this company, shows that warranty expenses 3% of the total selling price. So total selling price is 40,000. 3% of that is $1,200. Company record estimated expenses and liability with this entry as follows. So general entry for the provision of the warranty liability would be warranty expenses account debit $1,200 to estimated warranty liability. So in this case, the expenses of the company has increased by $1,200 and liability also has increased by crediting the estimated warranty liabilities. Now, on the next couple of days, suppose the customer brought laptop for repairs under warranty and the $500 that labor for the repair that become due. So it means when the repair is done by the employees of the company and that amount is due but not paid. But on the other side, the estimated warranty liability has decreased. So the estimated warranty liability with the $500 will be debit and the wage payable will be credit. Once the company will pay to their employees the $500, then wage payable to cash that will be the journal entry for that particular transactions. Now what we have learned today, we have learned how to make journal entries of provision of the estimated liabilities of the vacation pay, bonus payable, sales of gift cards, and product warranty liabilities.